Welcome to Global Business Insights, where we go into more details behind the leading business headlines. The U.S. Federal Trade Commission has voted to ban non-compete agreements across the U.S. economy in its bid to avoid wage suppression and protect innovation. A non-compete agreement stops an employee from competing with an employer after the employment period is over. The U.S. Senate has approved the $95 billion aid package for Ukraine, Israel, and Taiwan, including TikTok being forced to sell to non-Chinese interests or exit the U.S. Biden maybe could sign the bill today. U.S. Secretary of State Blinken begins a 3-day visit to China, and it is possible that sanctions on Chinese banks helping Iran could come up. Not much, however, is expected to be achieved from this visit, given the state of affairs between the US and China. European markets closed higher yesterday, with the UK's FTSE 100 hitting a fresh intraday record high. Meanwhile, the recovery of US stocks also continued as corporate earnings season ramped up and investors build on the strong gains from the previous session as calm returns to the geopolitics. At close, the Dow Jones inched up 0.8%, S&P 500 was up 1.2%, and the Nasdaq Composite also up 1.6%. Tesla say they will launch cheaper EV models ahead of the planned timeline, and they saw their shares jump in after hours despite reporting nose-diving revenues. Yesterday, we got latest April Purchasing Managers Index with weaknesses in manufacturing showing in the US, UK, and Germany's indices, dragging down the composite index in all three economies. South Africa Reserve Bank said it sees its benchmark interest rates remaining higher for a longer period as services inflation ticks up. And the former governor is facing the heat from Nigeria's Anti-Corruption Bureau as the Economic and Financial Crimes Commission, EFCC, steps up its act. Yesterday, we got a slew of latest PMI data from the major economies for April. PMIs give an early peep at how economies are faring. In the UK, the preliminary services data for April jumped to 54.9 from a previous reading of 53.1. ahead of a forecasted slip to 53. For manufacturing, PMI, however, contracted, falling sharply to 48.3 from a prior 50.3 reading. Weak market conditions was a drag on factory activity, but new business volumes still increased across the private sector as a whole. In Germany, where manufacturing is 20% of the economy, there was a similar sluggishness. Q1 saw weaker growth, but there's still a sign of some improvement. High interest rates, weak domestic and global demand is holding back growth as inflation eases and the labor market shows some strengthening. The German manufacturing itself rose to 42.2 in April from 41.9 in March, also below the 42.8 forecast. Services at 53.3 helped to bring up the composite growth to 50.5. And in the US, S&P Global Composite PMI dropped to 50.9 in April from 52.1, showing an expansion, albeit at a softer pace than in March. The factory PMI gauge fell to 49.9 from 51.9 in the same period, while services also edged lower to 50.9 from 51.7. According to Bank of England Chief Economist Hugh Peel, he said yesterday that the central bank is still unconvinced that inflation will return sustainably to the desired rate of 2%, adding that investors should not get too excited with decline in headline inflation. Tesla is not just about vehicles, but about an extended mobility ecosystem, which includes batteries, solar energy infrastructure, full service driving software, FSD, insurance services, lithium refining, energy storage, humanoid robots, AI compute, ride hail, and vehicle production. For Tesla, global EV sales are under pressure, with car makers prioritizing hybrids over electric vehicles. Tesla saw challenges in the first quarter with supply chain bottlenecks from the Red Sea conflict and an arson attack at its gigafactory in Berlin. But it continues to be committed to make its cars more affordable, seeing a future not just in electric, but also in accessible and affordable autonomous vehicles. The bad news was already known, and shares jumped in after hours after Musk told investors that production of new, much cheaper EV models could begin sooner. This was after it reported a 9% drop in first quarter revenue yesterday, also the biggest decline since 2012, and missed analyst estimates as it is forced to weather a season of ongoing price cuts. In Q1, revenue was $21.3 billion, which was below $22.15 billion expected and a far cry from $25.17 billion in the fourth quarter of last year. But Tesla is accelerating in other spaces, increasing AI training compute by more than 130% in Q1, seeing record energy storage deployment of 4.1 gigawatt hours in Q1 and producing over 1,000 Cybertrucks in a single week in April. Tesla knows costs have to come down in an increasingly competitive market and strained consumer wallets. Its shares have suffered, down 35%. The message of affordable AI electric vehicles sells well amid intensifying competition, with a similar angle to win market share. It all comes down to innovation and surfing through the waves in a tougher external context. In South Africa, the central bank has cautioned that rates may be kept higher for longer than previously expected. Inflation has been within the central bank's 3 to 6% target band since June last year, but well above the preferred 4.5% midpoint. The South African Reserve Bank unanimously decided to maintain its key repo rate at 8.25% at its last meeting in March. According to the Reserve Bank, one of the main pressures is from services inflation, forecasted to rise sharply to 5% this year compared to 4.2% in 2023. The bank said it saw uncertainty regarding the path of this inflation as components like housing see pressures increasing prices, and which are unlikely to abate in the near term. Governor Lesetia Kenyago is said to be working on a single point target of 3%, and said the bank, together with the National Treasury, was agreeing on a framework that will decide on what form a new target should take. In its latest IMF April growth revision, South Africa saw its GDP growth revised downwards by 0.1% to 0.9% in 2024 and 1.2% in 2025. The seasonally adjusted APSA Purchasing Managers Index also fell back to 49.2 in March 2024 from an over 1 year high of 51.7 in the prior month. Elections next week provides the opportunity to see change in an economy held back by poor power supply, corruption, and worsening demand levels, in addition to supply challenges due to gridlock at Durban Port, one of the busiest shipping terminals in Africa. A lot that better leadership and governance can fix. Nigeria's chairman of the Economic and Financial Crimes Commission, Ola Olukoyede, says a former governor of Kogi State, Yahaya Bello, transferred $720,000 from the government's coffers to Bureau de Change before leaving office to pay in advance for his children's school fees. The New York Times is also flagging the detention of Binance staff as wrong, given he's said not to be accountable for transactions under question and is being held hostage. Rule of law is important for business, and institutional lenders want to be sure funds borrowed are well spent in an environment where many investors and businesses still fear they may not be safe from a scenario similar to Nissan former chairperson Carlos Ghosn's abrupt arrest and brazen escape from Japan. Nigeria has to show it knows better in protecting the innocent until proven guilty. According to the New York Times, Binance hired Mr. Gambarian to work on compliance issues in 2021 and eventually made him the head of its financial crime compliance team. The other Binance executive involved is said to have escaped custody, and efforts are underway to bring him to answer to the law. Both officers, according to New York Times, have no role in decisions related to charges of tax evasion and other illegalities. What am I drawing attention to here? In Yahaya Bello's case of obvious and direct theft and involvement, he was protected by an army of security operatives and could not be picked up by EFCC, while the Binance officers were an easy arrest, now casted by the New York Times as resembling a crude kidnap for which Binance must pay $1 billion ransom. Binance may surely have a case to answer, but how this case is pursued matters. As for the Yahaya Bello case, seen as the tip of official corruption that routinely thrives unquestioned, the law must also be allowed to have its way, not just against Yahaya, but the many others, irrespective of perceived protections by the ruling government. Also arrested is Hadi Sirika, the Minister of Aviation under former President Muhammadu Buhari's administration, over an ongoing 8 billion naira money laundering probe of Nigerian Air that never took off. Sirika is currently meeting with EFCC investigators to answer questions on alleged fraudulent contracts awarded by him to Engirios Nigeria Limited, owned by his younger sibling Abubakar Sirika, and it goes on. The EFCC have their hands full. All these cases, including those like the former central bank governor, point to still existing leakages that require institutional responses to plug opportunities to drain resources. There also are opportunities for the rule of law to apply fairly and appropriately, irrespective of political or economic stature of parties involved. On other business news, Apple will host an event tagged Let Loose on its Apple's website on May 7, where it will launch new models of iPads, new accessories, and upgrades to the high-end iPad Pro. Roughly 20% of the S&P 500 have reported earnings as at yesterday, of which 76% have beaten analysts' expectations. Meta announces later today. Microsoft and Alphabet also report this week as analysts listen for future guidance narratives to justify already high price earning multiples and to gauge how high interest rates could affect valuations. Boeing also reports later today. And Texas Instruments gave a bullish revenue forecast for the current year, indicating that a slump in demand for industrial and automotive components may be easing. Their shares were up 1.25% at close. And also yesterday, General Motors upgraded its 2024 guidance after beating on both top and bottom lines for the first quarter, thanks to truck sales in North America. GM shares also closed up over 4%. More good news, Spotify returned the largest quarterly profit ever as CEO Daniel Ek declared a new phase of profitability for the streaming group. It reported net income of 197 million euros on 3.6 billion euros in revenue in Q1. A year ago, in the same quarter, it lost 225 million euros on 3 billion euros in revenue. Spotify has been pushing prices and attacking expenses, last year cutting over 2,000 employees. And looking at Asian stocks, they rose, tracking Wall Street following upbeat earnings announcements from the US, which may have been boosting risk sentiment, and also after calm was restored in the Middle East. Nikkei 225 up 2.42%, Hang Seng Hong Kong Index up 2.02%, Shanghai Composite up 0.76%, the Shenzhen up 0.74%, and the Kospi also up 2.01%. Well, that's it from me on Global Business Insights. This is Bodio Shosami. Please share and kindly follow on Facebook and LinkedIn. Subscribe on YouTube and X. Thank you very much for watching and following. Bye-bye.